All right, let's have a look at the assertions then to the financial statements. And I want you to see them in three different parts, okay? So the first one is the transactions in the year or the income statement. And what we're saying is that everything in the income statement must have occurred, the income statement must be complete and accurate, and everything classified correctly. And that's what you're going to test when you're testing to see if the income statement is showing a true and fair view. Did everything occur? Is it complete? Is it accurate? Is it classified properly? Now let's have a look from the balance sheet point of view, the year-end balances. Do they exist? Look at the rights and obligations. Rights means we have the control, obligation, keyword for liability. So is it our asset and is it our liability? Are they complete? Are they valued properly? And are they allocated between, let's say, tangibles and intangibles? Are they allocated properly on the balance sheet? And then finally, in accounts, you've got some disclosures, and they again need to have occurred. They need to be complete and understandable and as accurate as possible. So they're the different assertions, and you do have to learn these, but it's not quite as difficult as it might seem. Have a look at this table I've created for you here. And I'm saying the same thing. First of all, they all have to be complete. Okay, so you check in here that everything is complete. So on the balance sheet, really, you want to make sure that they've got all the liabilities, because that's the things that normally is normally understated. So you're checking for the completeness of liabilities, and on the income statement, you're really checking for the completeness of expenses. Now, the opposite of that is that they actually exist. And this is the same, of course. You may as well read the word exist for income statement and disclosures as well, because just that existed at the income statement, it can't exist at one date like it can on the balance sheet. So it just means it occurred during the year. But it means the same thing. Did it actually ever exist? Okay? And so you're checking for assets on the balance sheet, because we might be trying to pretend they're assets when they don't actually exist. And similarly, on the income statement, you're checking, did the sales exist? Did the sales occur? Okay, so you've got completeness of existence, and that's the same for them both, just slightly different words. And the same with the valuation. We have to value our assets and our liabilities. And the income statement, we have to value our sales and our expenses. But we just call it a different word. Instead of saying value it, we're just saying that it's accurate. And it's the same for disclosures. So that's what I wanted to show you, really, that completeness, existence, and valuation exist for all three. They're just called slightly separate things. And then they do differ slightly on the fourth one, where on the balance sheet, because it's assets and liabilities, we have to have control and obligation. For the income statement, because it's sales and expenses, we have to classify them differently according to their definition. And finally, disclosures have to be understandable.